Good morning, everybody. Give me a second here. All right. Good morning, good morning, good morning. So markets were higher. Now they're down a little bit. No big deal. So far, just consolidating yesterday's gain, which makes sense because that's what markets typically do, or stocks typically do. Charts, we need charts. Thank you, Robert. Okay. And just look, there are just normal, let's call them typical patterns. I don't know about normal, typical patterns. Doesn't always work out that way, but after wide range days, it's typical to have a narrow range day, especially with a pattern like this. Unfortunately, this is not a breakout type of a pattern. Whereas if you get, say, something like that bar, which was coming out of a consolidation, let's just say, you get a wide range bar and it comes up to the top of the base and you get an inside day. A lot of times that's what we would look for. Clearly that didn't happen at that time. That's one of the choices you make with this kind of a pattern where you say, well, you know what, typically you get an inside day. Let me see if I wait for the inside day and then I get a 1, 2, 3 pattern and I get on board. Yeah. Well, that's one way of doing it. The other way of doing it is just share sizing below the bar, which absolutely works. And then you look for a secondary entry point. So here, that's not exactly a 1, 2, 3 because it's got a tail on it right there, but you've got the body and the top of the wide range bar. So we would just look at this as, hey, those 2 bars are like 1 bar. It's just one monster bar. And then there was a consolidation day and the dip down is great. And this had what we call a void where it could go up. Right. So we don't have that now. Now we've got a trading range at this point in time. And I've just picked the Dow futures here. Oh, it's AG. And AG and YouTube saying, good morning. Thanks for what you guys do. Merry Christmas. You're welcome. Actually, AG, Dan and I wouldn't know what to do with ourselves if we weren't doing this, tell you the truth. Well, I guess Dan would be on his boat. He's got a harem and so he's got things to do. I'm kind of stuck here in the house and kind of more settled down and all that, but we love this. So we love sharing. We love what we do. And, it's all good for everybody. So, this come down here, hits the 200. Actually, it didn't hit the 200. On this day, I said, let's set our alerts down at the 200 on the Dow and the diamonds. And I don't know if I could zero in on this enough, but it just missed tagging it. You could see by like fractions, like a few ticks and pennies on the diamond. So it never triggered, but it came down there. And that's, setting it, on the software, I click on the line and I set an alert. And obviously plenty of others were looking at the same thing and anticipated that and stepped up right there. And, it stabilized. So now here we are, into the resistance area. You can see on the hourly, it popped up to the top of the 2 pivot highs, and now it's back down to the 2 pivot lows. And I don't know, we'll see if it breaks here. Maybe it goes a little bit lower. One of the ways, one of our rules, it's not a way, it's a rule, is that after we get a wide range bar, again, it's not the ideal wide range bar because of the congestion here, we still want to see it stay in the upper third, ideally, of the wide range bar. we want to see the body stay up there. So the tail, as you can see on like on this one here, the tail can dip down pretty deep, even because you get a bullish reversal situation like this. That doesn't mean you can't get a dip. So I would not be surprised to see this dip down into here today where buyers would step up, because you've got this. Okay, I forgot to click when I was done. You've got this little power move right here, which creates a void. I see these pivots here, but it broke out and that created uncertainty. And so, coming down to those same areas again are not going to be as reliable as it was on this one. So the second one, just common sense, traders that bought down there, they got, either they sold or some got stuck in it. So they're not going to be so anxious to step up again here. So if this should come down here, right, even to the bottom near that pivot low, you see where the X is on the futures on the daily chart, that could be the bottom tail that forms and then maybe starts working its way back up to, create the tail. So what do you do to try and take advantage of that? Well, you scrunch this up, right? And let's go over here and look where that lines up, which is down here. And you go like this. Well, that's kind of a messy area there, right? So you mark that off down there. And maybe you're looking at other things. And then you click here and you set an alert for the computer to watch that. And we see what happens. Right now it's in a trading range. And if there's not really too much to do unless you're really a very active scalper. All right. So S&Ps, what's the general bias for today? Because things generally have been moving in together. A little bit differences. The Russell was a lot stronger, but it was a lot weaker before, which makes sense. It's often the way it plays out. So S&Ps, came up off the low here. They're up into this resistance area. They're jiggling back and forth, similar pattern as what we saw there. That broke down through the 50 MA and it came back up again. And we've just got a wide whippy trading range and we'll see what it does. Similar 5-minute pattern there, really proves, hey, buyers, there's demand at prior lows and there's supply at prior highs. And if those reference points are relatively close together, it's going to be choppy. And so let's go to SPY. And you see the same thing. Where's SPY? 463. 463. Basically opening up in the same area. So no big deal, but there is that resistance to the left. It did run up, from the low here to the high. So to think it's going to continue up today, I don't know. I'd have to see some type of a continuation pattern. This jiggling sideways for a while, coming up to the high, just showing a refusal to go down. But I think, but you're listening to the news, more of this Omnicron, Corona, people getting nervous, shutdowns, no Christmas, the Grinch is here, and all of this. And so I guess investors, hedge fund managers, whatever, have to be getting a little nervous. And we'll see what plays out here. But it's like the beginning of the year might be a little rough unless there's a miracle recovery. Or, Dan Post sent me yesterday a note. They're paying people $100 to go get a vaccination. So more money in every different way. So SPX, what to do with SPX today? Well, if it just stays here jiggling around like that, you could do a condor, but things are relatively close. What was it, 46? The bullish move up, you got to be careful. This could just go up. It is near resistance there, but it was relatively close. Down below 45.70, down here, it's pretty reasonable. 45.70. It's down below yesterday's low, and there's a gap fill. There's really no support. You don't even have where's the 20 MA here? That's the 100, which is way down, actually down below that. So not even the 100 MA is there. You basically got nothing below here as a line of defense other than, retracing all the way back down, which it shouldn't do. So that you got 45.70 if you for a put spread, and it's very reasonable far away. So it's okay. Gap fill, bottom of yesterday's bar. It's a hell of a long run to get down there, since things are pulling in. 45.75. Yeah, so basically the same thing. I just took a peek over there, and 45.70 is 45/60. So, a little bit more at 45.75. I mean, 5 points could make all the difference, but who the hell knows? It shouldn't go down there. And that's the whole idea with a credit spread. It just shouldn't go down there. The way the futures are moving here, maybe see if this does roll over and break this. It's a balance there with these spreads that expire. They're fantastic because they're going to expire at the end of the day. But the clock is ticking, and with the premium that is there right now, might not be there in a half hour. So you have to make that decision in the moment. Right now, we got this trading range. However, should it break this and we do get the tail type situation, well, at that point, we have our plan. Where's our futures? I was marking the Dow, right, for the idea with the down here, but just apply it the same thing to the futures, down here where there could be a tail bar coming that far down, which would be under the rising 50 coming down in there. So if we were to get that break where this started to move down, you just look lower, look lower, further down where there's premium, because if it moves fast, the premium is going to pop. So that's the thing with options. You've got this time decay thing, which is great. And you've got this price momentum, or how fast it moves. And there's a Greek word for that. You'd have to ask Dan what it is. He speaks Greek. But it moves fast. And even though there's a little bit of time, those premiums pop fast because of the leverage in SPX. So you have to balance out that what's happening in an interpretation of speed versus time. You need to have a computer between your ears or some way other than doing it. All right. So the Russell, we talked about this possible turn back here. It made the turn. It whipped back down. It broke the lows. Now we got a wide range bar up. Obviously buyers are stepping up here, and same pattern here intraday. When popped up and came back in again, opens up the door to the idea of this pulling in at some point, maybe down to here where it forms a tail and buyers step up again. All right. So now we really see, is there this demand that we saw yesterday step up on the dip to push it back up, or does it stay red down there? All right. So in other words, hey, is all this Omicron talk, was it being taken seriously, or is it just more of this kind of lockdown, wear the mask and it all goes away, in a few days, it's, overblown. So now we look at the charts and see what people's reaction is to it versus what we see on the news. Tech, NASDAQ, a little different there, right? Broke down, came back up, a little bit more bullish type of price action where it broke a pivot low and it just came back up again, but still within a trading range right at this prior pivot high. All right, silver coming up a little bit, a lot of things just pretty slow in front of the holiday, sleepy markets, but We talked about this in prior videos, pre-market. It's like we got a nice, more defined type of a bottom. Left head, right shoulder, bottoming tail bar there on the weekly chart. All inflation and so on, gold. So this coming in a little too deep, right? It's still in the, about the upper half where the closes are. But this needs to hold today and start moving back up again. And crude oil, not bad. Not bad. Dipping, coming right back up, but now it's got to consolidate there. Tony asking me about internals. Here they are. Neutral as neutral can be. This is inching up, with that move up yesterday, which makes sense. It's not up here. And breath is stuck in the middle, right at the zero line. So just a quick mention, take any subjectivity, mystery out of this breath thing. For those that don't know what it is, it's called a Mcclellan Oscillator. I didn't create it. It was created decades ago by a guy named Sherman and his wife, and he's got a son. I think his name is Tom, that updates their interpretation of this thing. And all it is advancers minus decliners, and it applies a 19 and a 39 exponential moving average to that raw data, and it measures the difference between those two moving averages, kind of like a MACD, exactly like a MACD indicator. Just the difference between two moving averages is all it is. So when it's above the zero line, the 19 is above the 39. Right? 19 MA is above the 39. When it's below, the 19 is below the 39. And when it's at the zero line, they're touching. Well, that's what this line is doing, measuring the difference between those two moving averages and their relationship, or where they are in relation to each other. So being at the zero line, they're touching, which says it's neutral. It's neutral. We're in a trading range here. So we've got, whichever way this market wants to go, right? It's got gas to go up and it's got gas to go down right now. So this really doesn't give us any information, because all we're interested in is when they're both at extremes together, which they're not. And transports, right? Nice, right? I said this is what we needed to see yesterday to save the day. Let's see, it's that resistance, which leads us back to the probability that, while we might whip up and down a little bit, we're not going too far here today, it seems. And interest rates moving back down. Yesterday they were up nicely, which was good. Down a little today, which is not so good, but overall not going anywhere. So maybe we're going to be sitting here today, and then tomorrow I'm sure will be light volume and people leaving early and so on. So we'll see how it plays out. All yours, Dan.
Good morning. Yeah, I expect tomorrow very slow. But sometimes when the old saying, when the cat's away, the mice play. I've had some very nice low volume holiday moves. So, we'll still be here. Look at this ARC lady hit yesterday. Beautiful. We've been having a long discussion yesterday about W bottoms. Now this one I'd prefer if it didn't have this sideways consolidation, but still, if you measure the momentum move from November high, we've been seeing a lot of W retest patterns this past week, and that's primarily why we have so many put spreads open right now. But on spot, it's they don't have to be perfect, but it's Greg's saying it's the same but different. This one has a new low plus, momentum moved down, also went sideways a little bit. This Bumble, this is not a textbook W bottom again, but again, Greg's course, you know how to interpret the action. At a gap, breakdown failure, big move up, retest. So over on yesterday's high, that looks good. So all our opens are fine. If you have any questions, just ask. Jet OIH is a W bottom. Look at that. We found that yesterday. Look at this thing, Jets. So we gave this to our subscribers yesterday. W bottom. They're all over the place. Boeing, sloppier, but same kind of thing. All right, I'll go right to gappers and things. I just saw this thing going by the ticker, and it's just crazy moves here. This thing got cut in half in 7 weeks. This thing was at 50 bucks. It's crazy moves. I mean, could it be the start of something? Maybe, but I'd like to watch it for a couple days. Somebody's asking about Lyft shorting the 20 delta. Absolutely. Absolutely. So it's another W bottom, folks. They're all over the place. Momentum move down, up. We call this one a new low plus. So that looks great. I like it. I'm going to put that on a window on my other chart. And you know, just another hint, when things get so extended and go up and make a new low, this is exactly what we look for. If you were to short that, then it's just kind of a day trade. But this is more of what we look for, a breakdown failure because of the big momentum move down, which, you know, you can see on the weekly here. Oh, thanks, Rocco. You know, Rocco, sometimes I got to be careful about not getting too complicated, you know? So when I made that statement about we have positive time decay when the debit is less than the intrinsic value, I knew some heads were spinning. But then when we just broke it down, you know, I think psychologists call that chunking. So you just, you know, relax. Let's take it 1, 2, 3, and then you're like, oh, of course that makes sense. Thanks. All right, GPN. Somebody was asking about a 20 delta short put on this. The answer is absolutely yes. Go through the checklist. So this momentum move down, sideways, small breakdown failure, closing breakout. Now, just so those of you who don't know, this gentleman trader on YouTube who keeps saying 20 delta, that's just a strategy that they pull up their option table, and 20 delta just means it's far out of the money. That's fine. I have no problem with that. But for us, technical approach to option trading, I'd rather pick the strike by the pattern, not an arbitrary 20 delta, because you're not going to get a lot of money for 20. You know, maybe I do the 120s here as a delta of 38, 40. I don't know. You know, at the money's, well, it's not going to, you know what I'm saying. But yeah, that goes on the list. That's a definite pattern. Then the checklist then comprises, make sure they're liquid, make sure you're getting good credit, make sure no pending news. All right, this little guy popped up coming in. Something's going on there. It might set up as a day trade. Chris, it'll be emailed to you if you signed up for it. Look at this thing, breakdown failure. Debbie would tell you if she were out of bed. It's an ascending triangle. Debbie has trouble pronouncing that word. But look, higher lows, resistance, and boom. So that's a definite long watch here this morning. Baba, you know, it was a potential bottoming pattern, gapping down. It's a bearish gap. Yeah, it is automatic, Chris, but you still got to sign up. But just email me tomorrow, Chris, and I'll send you the link, because it usually takes our support a day or so to put it together and send it out. What a SEAC. I think this is a little shipper. That's a big old gap. Trip, double bottom, folks. Look, these are all over the place. This is a new low plus. It's still in a downtrend, but it's just an intelligent way to swing trade the bounce. APP, definitely. This, you know, the guy, I think the guy's name on YouTube, his screen name is Delta 20. But that's another beautiful W pattern. Now that one looks good enough to trade directionally. So, hey, hey, Greg, tell Delta 20 for me to sign up for a week to our trading room. Tell them to pay the $7, and I'll add another week for free because it's Christmas for him. Because I want to talk to him.
He hears you.
All right. Yeah, because you've given me 3 good trades. You need to be in our trading room so we can talk and, you know, trade. All right. So this, yeah, looks fantastic. All right, remember Dunking I was watching, or PayPal, we did a put spread, that looks great. Spot, Lyft, we did Hilton Hotels yesterday. All right, so I don't trade in the first 5 minutes, but I like this 5-minute high, target $65. It has clear air above. I'm just gonna post it right now. As a directional, and I got to go through my checklist for a put spread.